Hey everybody, welcome. This is Nicholas Live. We have John from Crypto Patterns and the expert 30-year trader, David. We're going to do an update on the Bitcoin trades we're looking to do and how our Ethereum trade is doing so far. Now, Ethereum is being stable at the trade we called it earlier, and it's still in play. But what's happening with Bitcoin, John?
Thanks, Nicholas. Folks, we want to give you an update of Bitcoin because it's so important to the overall market. And that's why I'm starting on this screen, because a good way to evaluate trades you're thinking about doing or trades you're already in the middle of is get a global view of the market. And a lot of people don't trade on Poloniex. That's not important. A lot of people don't want to trade things that trade in Tether. That's not important. What is important is the Poloniex Tether chart here has almost every high cap crypto in the entire market. Bitcoin and almost all the large altcoins are traded in Tether on Poloniex. So when I want to see how my trades are doing, I start here, and I recommend you do the same unless you have another chart that shows all these similar things. You know, to know what Digibyte's doing is nice, but it doesn't really have much to do with what's happening with Ethereum and Monero. This is the scoreboard for the crypto market in the big picture. So why do I want you to know that? Because we've got Bitcoin Cash up 33%. It just continues to be bullish and move up. We've got our Ethereum trade that we talked about this morning kind of holding steady. Been a little up, a little down. It's not really moving. But we've got Bitcoin continuing to show a little bit of a bullish trend. So before we even get into patterns and David gives you the current trade and how you might play it, just take a step back and think about if everything's moving the same direction and we've got Bitcoin Cash skyrocketing, Zcash has been outperforming, is up 11%, lots of green down here. We don't have much green up in these key cryptos. The idea is everything's moving the same direction. We still have a bullish trend going on until it's proven otherwise. Very important that you start looking at those correlations because you can find big trades doing it. I hope that made some sense. Now, and hopefully, at the very least, you understand why you want to look at Bitcoin, because if Bitcoin breaks out and starts moving up, what else is there to trade? And Ethereum hasn't really moved yet. We might be right in the right place at the right time. So let's see how Bitcoin's doing and see how that might help our Ethereum trade or us feel better about what we're doing with Ethereum. If you take a look at a 30-minute chart, and I've done a new one that I can mark up a little better for you. Let me get it set up here. Here we go. We're going to look at a 30-minute chart of Bitcoin. And we have a very similar pattern as we showed earlier in our broadcast about Ethereum. We've got the inverse head and shoulders. That's a bullish pattern. And basically, you can see we've kind of gone up and down and up and down. Interestingly, and this happens often, so once you learn about patterns, you can start watching for stuff like this. A second inverse head and shoulders has formed right here. So we actually have multiple bullish patterns, the big one and the small one. And in both cases, getting above this key, and it's going to be a little hard to draw with all the lines there, but I'm trying to show it to you. Getting up, and David's going to really hammer in on this, but getting above this key 8,400 level where things have just kind of hovered means a lot to the entire large cap crypto market and probably the entire crypto market. So that's the current setup. If I showed you the Bitcoin Cash chart, the price is already up here. Is that a forecast of what Bitcoin's going to do? Or is Bitcoin Cash going to crash back down because Bitcoin hasn't skyrocketed yet? Those are the kind of things you're really watching for all the time to make sure your trades are where you want them to be. So with that set up, let me turn it over to David, and he's going to walk you through how to either manage the Ethereum trade, which you still have from the earlier broadcast, or how to take on a Bitcoin trade if you prefer that trade. David?
Yeah, let's stay with the Bitcoin trade here, John. Because it's a real safe entry point if we want to sit here and wait a little bit and see how it reacts. There's a couple of ways of playing it. Both are going to be to the long side, and both are going to involve that key, let's call it 8,400 level that I see you're drawing in right there. So the first way is, as we're sitting a couple hundred points below it right now, is to wait, and as you can see on your 30-minute chart there, it's been sitting around there for a lot of hours, and it's actually, like you had mentioned, created another inverse head and shoulders pattern there. So what we're going to do is we're going to wait and wait for it to break out above both of these shoulders at the 8,400 level, and that is giving us the confirmation that we're in a good chance that it's going to continue up. Once we have that confirmation in place, we can feel good about entering our long, and now we can talk about setting a price for our stop and for our target price.
Does the same count if it drops below the 7,400 level?
Excuse me?
Are we gonna should we think or get ready for a possible short trade if it breaks under the 7,400 level?
Well, that's interesting, and actually, let me get to this setup first, because then we're going to talk about another way of playing it if it doesn't, in fact, go above the 8,400. Okay. But in this case, what we're going to do is enter on that break of 8,400. And Nicholas, you're right though to identify it. We're going to put our stop right below that 7,400. Let's call it 7,200, because if it does break that point, like you've identified, it's a point where the pattern has changed. It's a broken pattern. We may want to initiate a short at that point, but we certainly don't want to be holding our long much beyond that. So we're going to risk on this trade, let's say 1,200 points in the max. On the upside, we're gonna target 10,200 to 10,500. You can see that just on the far left of the graph, where there's a little bit of congestion up in the top left corner, and that's going to be our target. It's going to give us about a 2,000 point up move to maybe 1,200 on the downside. I certainly like those odds, especially if we have that confirmation. Now let's go to the case where we don't get that confirmation, and it does just start to drift lower. If you are, again, convinced that a long is the way to go, you can start to scale into a long position, working that right edge and right inverse head and shoulder pattern. And again, you're going to stick or stop below 7,200, but you can start to scale in as it gets through 8,000 and towards 7,400. To play for either a bounce back to the top of the shoulders or a bounce off of that the bottom of the head, which is 7,400 or so. Again, we're going to look to get out if it breaks that pattern. If it breaks under 7,400, I like to give us a couple hundred points room there and call it 7,200. So a couple of ways to play it along. Either A, if it goes up and gives you confirmation kind of that the pattern is well on its way, and the other is if it starts to fade towards the second head, if you will, at that middle 7,000 range, you can start to scale in a position and either play for continued congestion between 7,200 and 8,400. Last thing I want to mention is, in actuality, on the initial trade where we did say that we have a 10,200 to 10,500 target, in reality, I almost will certainly have a little bit offered, a little bit below 10,000. I very much believe in the psychology of big numbers. There's a lot of people out there that have offers at 10,000 that bought around there that are waiting for it to get back there. There are people that have bought below and said, if it can get back to 10,000, I will sell. So I always like to just put it in a little bit lower. Even if you're putting it at 99.90, even if you're putting it at 99.99, you'll definitely see huge size come in at the figures, and you always want to beat them. The last thing you want to be is, all right, I'm gonna sell it at 1,000, and you see a huge offer come in, and then the market sells off from there because it can't break through that size. So if I'm bidding, I like to bid a little bit above the big psychological numbers, and if I'm offering, we want to be offered a little bit below those numbers.
Yeah, and what I usually do is when I make trades, I usually try to if I'm buying, I usually try to get in at a range that's a random number above, a very flat, if I wanted to buy around, let's say, anywhere above 8,400, I would want to place a buy maybe about around 8,411 or something. Then if I want to sell, I would sell around 9,000 87 or something. 9,987. Yes, exactly. So something like very random numbers, and never go after even numbers.
Exactly.
I want to add a couple of things from a pattern side of the fence that might help traders about the trade David just laid out for you that many people don't watch, and they're really valuable. Specifically, let's start out with these very small shaded bars down here. They represent volume. And so we're on a 30-minute chart. What that means is every 30 minutes, they're showing you the volume. If it's up candle in that 30 minutes, volume is colored green. And we'll do we have our educational series. We'll learn all about volume, and we'll get you a bigger chart. A basic thing that I want any trader to be aware of. If we break out above 8,400, we want to see buyers are serious. And the only way to know buyers are serious is if there's a lot of them or if they're putting a lot of money into it. So you're looking for an indicator if we really move up 8,400, 8,450, 8,500 and beyond. We want to see that volume spike up and get back to these levels. See how it's way higher over here at the bottom? We want to know, hey, now buyers are serious about paying more at the top. That's a pattern that's a true breakout. So price can break out, but you want to see a confirmation with volume. It doesn't always happen, and there's tricks and tips you have to know about how to manage that. But it's, the strongest bullish patterns are going to break out with volume, and that means, hey, you're in the right place at the right time. Get in on the trade. The next thing I'd want you to know is that the experts that are the sharks, the whales, the big traders out there, they know you know that. You're looking for volume. So they'll give you a big volume spike, shoot it up to, almost 9,500 or something like that. And then they'll bring it right back down because they want you to think you take your money and get out, or they want you to hold and get all scared. And they just want to mess with your head is really what it boils down to. This happens almost every pattern breakout. It's called a retest. So you'll see a pattern shoot up, convincingly, and then it'll come back. And if it comes back at lower volume, that's a great sign you're in the right place. But we're getting a little ahead of ourselves. Just a couple of trader tips to watch for. If it explodes up with volume, very good confirmation. If it drifts back down, don't panic. You've got your stop in. David's taught us, make it automatic. Run the trade the way you played it, all right? But you can start to watch for indicators that can make you much more confident in the way you're managing your trades. So I wanted you to be aware of that. Final point is if we get stopped out on this trade, we've got an incredible ratio of what you could make versus what you're risking. And if you get stopped out below 7,400 here, 7,200, whatever you choose to pick, should you short? Does that mean we're heading to new lows and now it's time to short? Well, in our earlier broadcast, we showed you there was a very powerful indicator. I wish I had the chart. I don't. But you can go back and watch our prior broadcast of the futures chart. And the futures pros were showing they're bullish. And you don't want to bet against those guys unless you have a really strong case. So just because a little inverse head and shoulders pattern got beat, there's still a big old bullish pattern in play. It would not be time to short. It's just time to go to the sidelines. This short, and this is the takeaway for today's broadcast, the short actually starts when this big pattern gets broken. That's where you could pile in short and have a great chance to make a lot of money because now everything's broken. So we're actually, today's summary is we're suggesting you enter the trade at a higher price than we're at right now and short it at a lower price than even the ultimate current lows. So think about that for a minute. Most people want to try to buy as low as they can and sell as high as they can, and it doesn't always work that way. You want to make sure you've got pattern support and you're not getting in a trap, which this would be a perfect trap to drop it down here, get everybody out of their stops here, and then take it to the moon. Happens all the time. Wait until you see that all the support is broken. Now the pattern has failed, and then you can short safely with a nice tight stop, high return, low risk. And any additions on that analysis, David, or does that make sense?
Yeah, the only thing I would add is that there might be like interim short-term short plays that you might want to, take that have very well-defined and close stops put in place. But, there's a lot of points between that 7,200 break and 5,900 bottom. I wouldn't say that nowhere in there is a place that you might find, several hundred points that you might want to short. But agree with the overall thing. And again, it breaking below that 6,000 is very similar to it breaking above the 8,400. You're just looking for confirmation that the pattern is broken or the pattern is continuing. Anything else in the middle is just less confirmation to it.
Awesome.
Right. So that's what patterns do. We teach probabilities, so you always have an edge whenever you're entering a trade. No guarantees in trading. We all know that. But if you know you've built a little bit of an edge versus the odds, you're going to win more often than you lose, and that's how to be successful in this business long term. Back to you, Nicholas.
Awesome. Well, thank you so much, John, and thank you so much, David. And I will see you guys again on Saturday.
Thank you.